Let's talk with Mark Hibbs, Managing Director and Portfolio Manager at Gentoo Partners. Our guest host Mikio Kimada from LGT Capital Partners is still with us. Mark, hi. Really good to have you with us today. You know, Mikio was telling us earlier on when we were talking about markets in general that the weaker yen in Japan makes the Japanese markets one of the most likely candidates for a pullback, which would make a great buying opportunity out there. I wanted to ask you about this because, of course, it seems like when we look at some of these earnings that Carrie was just talking about, currency hedging has actually cost Japanese companies like Honda the chance to fully cash in on this weekend that we've seen. So does this not raise the risk that essentially investor expectations, what we're seeing right now in the market, might actually outrun what's happening on the earnings space?
Potentially, although we doubt it. We think certainly the yen weakening against all the major currencies that the automakers, the Japanese autos, are actually competing against, like the Korean won, US dollar and the euro. It's a bit of a game changer here because the Japanese, despite the hedging that you mentioned, we think they are going to be back and be a force to be reckoned with. They've been on the defensive for, what, 4 years, give or take. They've managed to restructure. They're much more profitable. Even given, you know, cap utilizations are down, we think that they've got a long way to go. I mean, there's certainly threats here to, obviously, the European car makers. They haven't been doing very well anyway. At the kind of VFM, or the value for money end of the scale, the Koreans are obviously suffering here. If you can buy, you know, say a small compact from a Japanese manufacturer, which is a better quality product, and they can cut the price by $2,000 or $3,000, they're going to have some problems here. Also in the luxury segment in the US, I think you've got obviously the Germans are obviously big players here. I think certainly they've grabbed a lot of market share from the Japanese quite, you know, over the last few years. I think that you'll see the Japanese come back there too. So we're pretty bullish and long.
Mark, hi, it's Adam in Singapore. In your notes, you mentioned that investors are pretty much sitting on the sidelines still. Does this suggest that eventually, or if not now, we're seeing this market really just climb a wall of worry for missing out?
Well, I think that's right. I think a lot of people, I think the last time I was on, I was suggesting they're being dragged kicking and screaming into this because it's kind of once bitten, twice shy. But we do think that the policies certainly that have been put on the table by the government, and obviously the change in governor, which is expected, would essentially have the Ministry of Finance, Bank of Japan and the government all essentially singing from the same sheet. So we think that's quite powerful.
Yeah, I was wondering, would you have any view on the yen? I mean, like a specific level that goes with your view, or you just think directionally it's going to go down, therefore the market's going to do well?
Well, it's difficult to find a catalyst unless you look kind of geopolitically and or for potential problems with the Eurozone to resurface, and that's always a worry for us. But we do think, we've been surprised a little bit, honestly, by the pace of decline. But we see nothing that's likely to stop that.
Right.
Okay. Mark, hi, it's Adam again. I just want to talk to you about where interest rates might be going in Japan. We know, of course, they want to be depressed, and the central bank is going to go as far as possible to do that. But one of our other guests earlier on the program said one of the biggest global risks will be that interest rates in Japan actually spike. Do you see that happening at all?
No. Why?
Not at all? Well, even if there's a
not really. I mean, I think.
What about potential rotation for the fixed income markets?
Understand, but we do think that with a more proactive Bank of Japan that you might see a lot of that kind of demand leakage that you're kind of inferring be taken up by the bank.
Yeah, I would agree with that.
Yeah, okay. All right, we got to go. We are out of time. Mark, good to have you with us.